Rafiwa Madzena, can you believe it? I mean, you're saying it was off a low base, but higher than predicted.
That's right. So economists that were polled had anticipated that they'd come in at around 2.5%. And the biggest reasons, the contributors here, we saw the mining sector, an astonishing 14% contribution to GDP. So we know that in Q1, that major contraction that we saw was because of the lack of power supply, all thanks to Eskom. Now there's been a stabilization of power, and mining companies are able to produce and export commodities. You do know that South Africa is a net exporter of commodities, so that was very good for the miners, a contribution about 89 billion rand to the economy in the second quarter of this year. We also did see that household and government expenditure was up, so consumers were spending a little bit more money. Interestingly, not going on holiday or resorts, whatever, just buying basic foods and going out for some recreational activities in light of the current economic climate.
I mean, is it premature to say that this has any good effect on our unemployment numbers?
It's premature because, as you mentioned earlier, it comes off a low base. We did see that government expenditure for the second quarter was mainly to create jobs within government, but that's just a drop in the ocean based on the current unemployment figure that we have, 29%. So while it's good growth, it comes off a low base. I mean, for the year, we're still growing at around, for the first 6 months of this year, only at around 0.4%, and that's not enough of a dent to contribute to creating jobs in the economy at the moment.
What is our target for growth for the year, ideally?
So ideally, we should be growing at around 1.2%, but those estimates have since been reduced. The Reserve Bank reduced it to around 0.6% based on the current economic activity that we're seeing. But we did see that there is some good economic data, retail sales out, improved manufacturing. So perhaps those estimates will be revised back into the 1 percentiles just based on the figures that we're seeing today.
And of course, as we count down to the end of the year, Q3 and Q4 in particular will be good contributors to overall GDP.
That's right. So there will be strong contributors to overall GDP, especially now that we've averted a technical recession. And also what it's done is that it's contributed to the improved currency. So as soon as the GDP figures came out, the currency improved quite a bit from about 15.23 to 15.27. So we are seeing that the currency has improved. And as you were asking a little bit earlier, you will see that in Q3 and Q4, if economic activity continues in the trajectory that it's been, we might be in a good footing for at least a percentage of growth.
And for South Africans who are watching, 3.1% in Q2 of 2019, they're thinking, how does this really affect my bottom line at home? What would you say?
So basically what it does is that it opens up for the likes of the Reserve Bank to ease up on things like interest rates, which puts a little bit more money into your pocket. It also means that the cost of the spending, so the cost of goods and services won't be increasing at a pace that it would normally would. And I guess a basic one, a very practical one, would be the price of petrol. If the rand can sustain the strength that it's just gotten, we might be paying a little bit less for petrol in the coming months.
Yeah, fingers crossed for that. Thanks very much for that from our business desk, Rafiwa Madzena. South African economy growing by 3.1% in the second quarter of 2019. Who knew? We've got some good news for you.